If you are a crypto trader, I'm going to show you a very short and sweet tutorial on how you can approach leverage trading. If you're new to crypto and don't really, deal with all technical analysis and don't want to do all that, but you just kind of want to like dip your toes in. Now, obviously, I don't advocate for leverage in any way, but a lot of people do this, and I always tell people it's essentially like you're going to a casino where, if you're going to go spend and throw away $200, that's basically how you want to look at leverage, because most traders, probably you're going to lose all your money. So I'm going to give you a few tools that I kind of, I use this in confluence with my technical analysis and my other indicators, because I also use Market Cipher, which is a huge indicator that's helped me a lot. But let's just assume that you want to do this in a free way. This is what I would sort of recommend. So let me show you really quick. Now, this is obviously TradingView. If you're not already in my Telegram, I've already posted this. This is like the main, chart kind of application that I use. This is a Bitcoin chart. And this indicator is free. It's called the Leviathan liquidation levels. And so basically the way that you would want to look at this is the exchanges do not necessarily make money based on the prices of crypto. They treat this as a business where they pretty much, make most of their fees off of either like trader fees, funding fees, or liquidating leverage traders. And so you can think of these lines as areas of liquidity where they would make money based on liquidating these traders. Now, the red line is basically your 100x positions that are opened up. The yellow is your 50x, and then the blue is your 25x leverage. Now, depending on what kind of time frame you are, most people, they don't really go on like, this is on the 1 minute, and this is usually like the shorter time horizons, right? So similar to how scalping is when you're on like the 1 minute or the 30-second or whatever the case may be, this is more of the immediate price action that you can kind of expect. Now, I'm going to show you what this would look like on a 5 minute, basically showing that there's going to be larger areas of liquidity, right? And so logically speaking, if you just look at this, like you notice that there's a lot of liquidity kind of on both directions, right? And you can see like whatever altcoin, usually this is applicable for. Now, obviously, whenever it comes to trading and kind of having a setup, I always basically use the 1 minute. And so this would tell you that obviously the market has sold off today, and most of the liquidity on the downside is kind of taken out. And so you would see on the short term, it would probably make more sense for them to go up, right? And so if I was just barely gonna, or like literally gonna make a trade based off of this, the kind of setup that I would look at is, so for example, I would ideally want them to take out the 100x leverage, because that's usually always going to be taken out no matter what. Exchanges don't want to pay out those kinds of people. And so I would I always scale into these trades, right? And you want to take very low leverage. I'm talking below a 3x leverage. If you opened up your initial position, let's say you had $100, I would probably put, maybe 30% of it right here at 89.4. I would probably scale in right around here, which would be probably like another 30% of my, full size at, so we're looking at 80, let's see, let's call it 88.5. Second position at 87,000 flat. And then probably my third position, my scale in would be around here at probably 85.9, right? And so I would target these upper areas of liquidity. And you'd maybe look at maybe a take profit, maybe like first one could be around like 92-ish maybe. And then you can do your other take profit if you wanted, maybe like right where the yellows kind of coincide and like match up with the blues. That would put you at like 95,200. And then your third take profit can be maybe up here. And obviously you can scale your trade to be in it or whatever the case may be and ride the trend up. That is just like one of the basic, kind of ways that's going to set you up for at least a little bit of an advantage, because most people are horrible when it comes to technical analysis. There's so many different ways that people can trade. And so this is just one of the types of confluences that I use. Now I'm going to take you to the second one where this is also free. It's CoinGlass. I can show you this right here. CoinGlass liquidations, right? Now this is basically I'm going to show you the cumulative liquidations, right? So let me show you really quick. So this is the Bitcoin exchange liquidation map, right? So let's go to the 1 day. This kind of shows you at a glance. It gets you like the cumulative between Binance, OKX, and Bybit, which are basically the bigger exchanges when it comes to leverage trading. So on a daily time frame, what can you see from this picture, right? Most of the liquidations would be made if they send the price higher. So you would be looking at about $2.1 billion worth of liquidating traders if they send the price. At the bottom, you can see it's about, let me show you, it's kind of blurry. It's about 98,360, right? Versus like, they would make on this side, let's call it, they would make $1 billion, sending the price to about $80,000. This is on a 1-day time horizon, right? Now, you can obviously extrapolate this and move this into a larger time frame. So if you go to like something like the 30-day, it tells a whole different story. And this is also one of my areas of confluence as to why I'm kind of bullish with us at least going into a lower high on Bitcoin. You know, I'm not calling for new all-time highs just yet. A lot of work needs to be done by the bulls. But you can see on the short term, you know, there's going to be a lot of liquidity that they can make, basically sending the price all the way up into literally $104,000. So if they sent it all the way over here, you'd liquidate and get all this money, right? And so this is a cumulative leverage of $11.9 billion that the exchanges would make just off of liquidating those traders that are basically short. And so you see on the downside, they pretty much wiped out most of the liquidity. So even if they sent the price down to about $88 or $78,000, they would make about $5 billion, which is a good amount, right? But you know, if you look at this and you're an exchange and you want to make the most amount of money, what would you probably do? You probably have a bias towards liquidating everybody that's in a short position that's been saying that the bull market's over. You've tricked all these traders. Simultaneously, we have basically let me talk to you guys this way. So basically you have JPMorgan, you have Vanguard, you have Charles Schwab. They're all offering Bitcoin-based products to their clients, and they're probably wanting to accumulate a lot of Bitcoin, right? And so logically speaking, if you're these people and you're these exchanges, the exchanges would basically feed off of this whole fear and greed that the traders kind of go through. And you know, it's kind of like a win-win, right? Because the exchanges make most of the money. We're about to get a whole like Clarity Act and you know, kind of like anti-manipulation act where, you know, exchanges can't really operate the way that they've been doing. And, you know, I think it's pretty obvious that the price has been suppressed and there's been a lot of accumulation through these big players. So while I do think that it is very possible that we could go into a bearish trend, I maintain a short-term bullish stance just because of the sole fact that there's so much liquidity and low-hanging fruit that these exchanges can make. And not to mention that if these clients of BlackRock and JPMorgan and whatever are offering these Bitcoin products to their customers and their clients, it's also going to make them look good if they're making the money. So, they need attention in the market just as much as, the next guy. So that's why I maintain a bullish stance. Like I said, this is in no way financial advice. I do not advocate for leverage. You're probably going to lose most of your money. But at least if you're doing something like this and you're going to do it and you're going to throw away your money, this is going to set you up at least to give you some sort of bias of a general direction. And then from there, you can kind of learn TA. You can develop a strategy that works for you, all that kind of stuff. So with that being said, I'm off. I'm going to go get some sushi. I had a workout. I hope you guys enjoy your weekend. If you have any questions, comments, drop them below. Make sure you subscribe, turn on your bell notifications so that you can get all my time-sensitive updates and just support your boy. So with that being said, have a great weekend, guys. Trade safe. Bye.